Hello and welcome to this session in which we would look at the contribution margin ratio. When we say ratio, it means a percentage. In the prior session, we looked at the contribution margin. How do we compute the contribution margin? In this session, we're going to be looking more at the contribution margin ratio and how do we use this ratio to make business decisions. So what is the contribution margin? Well, it's the selling price minus the variable cost. Simply put, if we have a product and we're selling a product for $10, it's costing us $6 to buy the product. 10 minus 6 will give us a contribution margin of $4 per 1 unit. Now, we can take this information and compute a percentage to figure out how much each unit we are selling is contributing to our margin, to our contribution margin. Well, to compute the contribution margin ratio, which is a percentage, we'll take the contribution margin, which is $4 as computed above, divided by the sales. Sales is $10. We're only considering 1 unit. And this gives us the contribution margin ratio of 40%. So what did we do? Why did we do this? Well, because for some companies, they might have sales of, for example, $100 sales and the contribution margin is $40. And for some companies, they might have sales of $1 billion. Then how can we compare a company with the sales of $100? Don't read it literally. And all what I'm trying to say is there's a difference in size and a company with sales of $1 billion. Well, we can take the company with sales in billions of dollars, figure out their contribution margin, okay? And let's assume their contribution margin is actually 300 million. If their contribution margin is 300 million and their sales is 1 billion, we would say that this company has a contribution margin of 30%. So notice, although the size of the companies, although I'm being extreme here, but extreme to make the point, this is company A, this is company B. If I'm comparing company A to company B, once I compute their contribution margin ratio, one is 40%, one is 30%, then I can compare them. Then we are basically factoring the size out and using percentages. So this is another way how we use the contribution margin ratio to make decisions. And this is used in when you conduct an audit, when you conduct financial statement analysis, you would use those contribution margin ratio. Now, this is the company that we are working with, Adam Electronics Retailer. Remember, Adam sells tablets, and the price per tablet is $500. And for this scenario, we are selling 400 tablets. 400 tablets times $50 is sales of $200,000. If you want to copy this information down, because we're going to be using the data from this example throughout this session, variable cost per 1 tablet is $300. So we're selling tablets. So the variable cost is 300 times 400 is 120,000. Our contribution margin, which is sales, notice sales less variable cost is 80,000. Then we deduct the fixed cost and we happen to have a net operating profit of 0. But we can also compute the contribution margin for this company. Well, how do we compute the contribution margin? We can take 200 divided by 500, and this is the contribution margin per unit, the contribution margin ratio. Same thing, we can take the total contribution margin divided by total sales, and it's also going to give us 40%. So the contribution margin, whether you use the price per unit or the total contribution margin divided by total sales, it's going to give us the same percentage. Now, also, we could compute what's called the variable expense ratio. And the variable expense ratio is taking variable expenses per unit divided by sales per unit, or total variable expenses divided by total sales. Sometimes you might be giving the individual price. Sometimes you might be giving the total. You can go back and forth, and we'll see in an example later how we can go back and forth between those two ratios. Now, what does that mean? What does it mean that we have a 40% contribution margin ratio? It means each dollar in sales that we can generate, each increase, result in total contribution margin of 40 cents. So every time we sell for $1, we can add to our contribution margin 40 cents. Now, if we sell $100, we can add $40, so on and so forth. Now, how can we use this information to make a prediction, to do what-if analysis? So how can we use the contribution margin ratio? Well, we can use it to predict what would our profit be if things changes. What if tablet sales increase from 400 to 500? Remember in the original example, we sold 400 tablets. So it's an increase of $100. Well, we sell each tablet for $500. So that's an increase in sales of $50,000. Now, knowing what we know, we have a contribution margin ratio of 40%. Well, guess what? If we increase sales by 50,000, it means we should increase our contribution margin by 20,000, and this should flow to the bottom line because in the example that we worked, remember in the example that we worked, we already covered the fixed expense. So let's prove this. Let's show you this in a contribution margin format. Well, total sales now is 250,000 because we increased tablets by 100 tablets. Again, 100 times 50 will give us an additional $50,000 in sales. From the sales, we deduct the contribution margin, which is 500 tablets times $300. This is the variable cost. Sales minus variable expenses or variable cost will give us a contribution margin of 100. Minus 80 will give us a profit of 20,000, which is an increase in profit from 0 to 20,000. And it's basically what we predicted even before we went through this computation. We could also use the contribution margin ratio using what's called an equation. And basically, what is an equation? And this is where you need to be very familiar with the contribution margin ratio income statement because the equation is derived from that. What is the contribution margin income statement? Let's take a look at it one more time. It's sales minus variable cost equal to contribution margin minus fixed cost equal to your net profit or net operating income. So we can express profit too. If we can take profit should equal to, you could use the contribution margin ratio for our purposes is 40%, multiplied by sales. That's going to be our contribution margin. Then we can deduct the fixed expenses. So it's basically, in a sense, it's a shortcut, but it's derived from the contribution margin income statement. So we are not doing anything that you should not be familiar with, except we are expressing this information differently. Or another way to compute profit is to take the unit contribution margin, which is $200 per unit. This is dollar amount unit contribution margin versus the unit ratio, the contribution margin ratio, multiply by quantity. Quantity is how many units we are going to sell. Then we can deduct the fixed cost. Now let's take a look at an example. What do we expect profit to be if sales is 600 tablets? The selling price is 500 and 300 variable cost. Basically the same data. Well, let's use the contribution margin ratio of 40%. Remember, for this example, 200 divided by 500 is 40%. Our contribution margin is 40%. So here's what we do. We'll take 40% times sales. That's going to give us 120,000 minus fixed cost will give us 40,000 of profit. Or we can use the contribution margin per unit, which is $200, times the quantity we're selling, 600. That's going to give us 120,000 minus fixed cost of 80,000 will give us a profit of 40,000. So make sure you are familiar with this formula because you will need to use it. So let's take a look at this exercise. Zinc Talk company manufactures and sells a single product, has provided the following data concerning its most recent month of operation. Sales, 6,300 unit. At total sales of 415,800, variable cost of 289,800. Contribution margin is 126,000. Fixed cost, 98,500. And the net operating income based on the scenario is 27,500. Simply put, what they're giving us here. And if you're giving this on the exam, that's great. This is the contribution margin formula or ratio or income statement, which will be very, very easy for you once you know how this is all structured. So sales minus variable cost equal to the contribution margin minus fixed cost equal to net operating income. They're asking you, what happened if sales is 6,100 unit? What will be the net contribution margin? Actually, immediately you should be able to eliminate two choices. It cannot be 27,500. It cannot be 122 because it has to be less than 27,500. It's either B or D. So if you're guessing, you just have to guess, and you're better off with 50% chance. Well, you don't have to guess. We're going to go ahead and work this problem. Well, for one thing, I can find the contribution margin ratio immediately by taking 126,000 divided by 415,800, and it's going to be 0.303030 rounding. Okay, it's not a good ratio to illustrate, but all what I did is I take 126 contribution margin divided by sales. So this is the contribution margin ratio. I don't know my selling price per unit, but can I find my selling price per unit? Sure, I can. If my total sales is 415,800 for 6,300 unit, I can take the total sales divided by the number of units I sold, and by doing so, I will find my selling price per one unit, which happens to be, divide this by 6,300, is $66. Also, I can do the same thing for my variable cost per unit because it varies in proportion to sales. So my variable cost total is 289,800 divided by 6,300 unit. And this is going to give me my contribution margin for one unit. And that's $46. Now, if I take sales minus variable cost, easy $20. If I take $20 divided by 66, it's going to give you back to this ratio 0.3030 forever, which is not going to be good one if we do the contribution margin. It's going to round, but we don't have to use the contribution margin. We'll use the contribution margin per unit. Now the question is, back to the question, what's my operating income? Well, if I'm selling 6,100 unit and my contribution margin per unit is $20, if I take 6,100 times $20, that's going to give me 6,100 times $20. That's going to give me a total contribution margin of 122. Now, from the contribution margin, all what I have to do, deduct my fixed expense, and it's going to be 98,500. It's going to give me 23,500. Now, if I use the other formula, which is the percentage, first I have to find sales. It's 6,100 times sales is selling price per unit 66. So if I take 6,100 unit, 6,100 times $66, that's going to give me total sales of 402,600. Now you have to multiply by 0.303030 repeating, because this is going to be a rounding issue. I did this, and it's going to be, if I do it, for several one, it's going to give me, if I do 0.30303030, okay, it's going to give me contribution margin again of 122, so I'm using the percentage. Again, if I deduct 98,500, it's going to give me 23,500, the same answer.